Hello and welcome to the CBRE Northside's end of year wrap up. 2017 has certainly finished strong with a spike of demand and transaction volume during the second half of the year. We're proud to have been a part of some of the most significant Northside sales and leases this year, both in size and sheer volume. We've really covered all aspects of the market this year: leasing, investment sales, owner-occupier sales and vacant land sales, making sure no stone has been left unturned and we've best serviced our clients. Now let's hear from each of the team on just a snapshot of these transactions and some trends that we've seen throughout the year in each of our respective areas.
The Northern Trade Coast has gone from strength to strength in 2017 with the continued gentrification of the Eagle Farm Pinkenbar precinct. Earthworks will commence this month on the $158 million cruise ship terminal at Luggage Point in Pinkenbar. The new terminal will be around 9,300 square metres, set over 2 levels, and will create jobs over the 2-year construction period. It is tipped to inject significant expenditure into the Brisbane economy. This will improve the industrial and commercial precinct further and attract major occupiers to the area. An immediate example of this is the 10-year lease commitment by Grays Online to a 40,000 square metre site adjacent to the cruise ship terminal. Grays will pay $1.2 million per annum for the purpose-built facility due for completion in 2018. Land prices in Eagle Farm and Pinkenbar continue to perform strongly, with sales recorded between $550 to $650 per square metre, and sales further north in Northgate and Banyo recorded between $480 to $500 per square metre. There is limited vacancy in the inner northern industrial market, with a recent take-up of secondary leasing stock. Landlords are refurbishing secondary buildings and providing increased incentives to secure good quality tenants.
Over 2017, the outer north industrial market has continued to mature into a serious destination. In the past, Brendale, Narangba and North Lakes had been seen as the outskirts of Brisbane and too far for purchasers and tenants alike. National property groups have realised the emergence of the outer north market throughout the year. Mum and dad investors continue to be a big player in the sub $4 million investment market. We're seeing a trend of traditional residential property investors migrating to industrial and commercial investments. Length of tenure and low maintenance properties tend to be the most desirable qualities for these groups. Industrial land continues to be trading well, with an uplift in price of 5 and 10% from last year. Stockland North Lakes and New Base Brendale lead the pack with the highest volumes of transactions. We have seen more owner-occupiers purchasing allotments throughout the year, and we expect that trend to continue through 2018.
140 to 160 Robinson Road Geebung was sold this year for $27 million. The 27,400 site is home to several A-grade tenanted buildings and was sold as an investment. And 405 Newman Road Geebung was sold for $11,465,000, a 35,000 square metre site with a short-term lease back and likely redevelopment of older style buildings. Once again this year in the Geebung, Virginia Zilmere precinct, we've seen the biggest demand from owner-occupiers in the sub $5 million range, hunting for freehold assets to move their businesses into. This demand has resulted in numerous tenancies advertised for lease initially being sold, when owner-occupiers come along looking to take advantage of the low interest rate environment and asking the question, will the owner consider selling? With very limited land left to develop within the precinct and many businesses not wanting to move further north, the opportunities to buy freehold assets vacant possession has been limited. While some owners advertising for lease may initially comment, but if I sold, what do I do with the money, or what else is there to buy? After further investment return assessment and rental income analysis, many have realised that selling vacant possession has made perfect sense. That wraps up our end of 2017 market update. We've still got approximately 4 weeks until things start to quieten down and not fire up again until late January next year. However, like most years, the inquiries will still continue to come in over the break when people slow down, but have more time to look for a property to buy or lease. That will keep the CBRE Northside team a little busy over the break, making sure we continue to service our clients all year round. Thank you all for your business this year. It's been a pleasure, and we look forward to helping you with all things property in 2018.